Well, that positive start we saw to February seems to have lost some steam already. We had Wall Street a bit weaker last night, and we're seeing some selling pressure in our market today, and particularly on those resources stocks.
Yes, absolutely, Stephen. I think the fear factor is coming right back into this market. We had 2 days of nice gains there, but the fear factor coming back in. I think that's also based on what Obama came out saying yesterday, that he's planning to complete his financial sector and healthcare sector reforms, and what he plans to do there seems to suggest to investors that company profits may be crimped by that, and that it may not be smooth sailing going forward. That a lot of legislation coming in there will be just a burden on those sectors. So the market not liking it at all, and we saw the dollar go up quite a bit, and we saw commodities pull back quite a bit also. So yeah, not a good start to the day.
I mean, is this what perhaps you call in the industry a little bit of profit taking, perhaps?
Yeah, there would be some profit taking, but I think it's a little bit of more fear than it is profit taking. I think they just want to see things playing out, and also, most important number coming out tomorrow, which is the non-farm payroll data, that numbers that are coming out tomorrow, as well as the unemployment numbers that are coming out of the States tomorrow. And so I think the national jobless claims will start us off today, give us a kind of sense as to what to expect tomorrow. But the market just holding back a little bit, waiting to see what happens with those numbers, and then maybe some kind of direction will happen. But hoping for a little bit on the surprise on the good side.
With that non-farm payroll data tomorrow, is the market actually looking for a gain in jobs in the United States, so we can see that unemployment rate coming down from the 10% that it currently sits at?
I think the expectations at the moment is for the unemployment rate to stay as is, but I think we fear that there may be a slight worsening. Employment data that has come out so far out of the States in the past week has not been necessarily encouraging, and so I think the services sector also yesterday coming out not very encouraging numbers there, but we are expecting it to somehow stay the same. We're expecting a slight pullback there in the unemployment numbers, the non-farm payroll numbers, sorry, coming out tomorrow, but we'll see what happens, and I think the market just really holding its breath at the moment.
Of course, we also have the Bank of England and the European Central Bank making their announcements on interest rates in just a short while, in fact early this afternoon. And are these key for the market? Will we be looking for the future direction of monetary policy, even if rates are kept unchanged at this stage?
Yes, I think what the market will be looking for is what the individual presidents of those banks say. I think we're all expecting for rates to stay unchanged, 0.5 in the UK, 1% in the Eurozone. But, we've had a lot of problems in the Eurozone of late with Greece, Portugal, and now rumours about Spain, and little jitters going on there. But, so we just want to hear what the presidents will have to say, of those banks will have to say going forward, what they expect. Are their reforms working? Is their quantitative easing working? And what do they expect going forward, especially with the smaller European countries, just to hear what the direction is there, what their stance is, and how what they will be doing to help out there.
Ntombenhle, Goldfields results out this morning. Net profits up from 1 billion in the September quarter last year to 1.4 billion in the December quarter. Shares a little bit under pressure this morning, down by 1.2%, but really in line with the broader market. Well, what did you make of those numbers?
Yeah, not a bad showing from Goldfields, up 40% profit, but based on the higher gold price. I mean, as I said last week, I think a lot of gold miners will benefit from, in the December quarter, or the quarter that ended in December, they will benefit a lot from what the gold price did there. But I think also we have to consider their costs and, the individual mines, how they operate in, as far as costs are concerned. And Goldfields showing that they did do well, but however production went down. They're trying to put in some plans in place there to maybe increase working hours or increase working days, and they also declared a dividend of 50 cents, which was a very good showing from Goldfields. But the market not to say is ignoring it, but we've seen a pullback in commodity prices, so therefore it would affect companies such as Goldfields, Anglos, and and the rest of the miners or the commodity counters. But so that's what we're really seeing at the moment. So they haven't really gotten to the accolade that they should have gotten for impressive results today.
And of course, Goldfields, the first of the gold miners to report back. Are they setting a benchmark, do you think, for the other big players, for Harmony and Anglo Gold?
Well, like I said, I think they will be doing well because because of what the gold price did in the last quarter, ending in December 2009, and and just based on that, I think that they will actually show much better than expected results. However, as I said, it is about whether they manage to keep their costs down, whether they manage to maintain production or to somehow increase production. As you remember, the last quarter there are a lot of public holidays. There's lots of as we saw with Goldfields, there was some stoppage due to some seismic activities in the Driefontein mine, and so those kind of factors come into that sector, and that affects their profitability or their revenue. But but we are expecting that the gold price would have been their saving grace.